Video, I'm going to demonstrate a simple but powerful method of how to tame forex and basically take charge of your trading. This method, when applied as shown, acts as a powerful enter or not to enter warning system. As always, I would expect all traders to demo trade, paper trade, backtest my methods to get a feel and see for yourself just how effective this method is. So what exactly is this method? Here is a 60-minute chart of the euro and the US dollar. I use two simple moving averages, that is the 50 moving average and the 20 moving average. These are just the simple moving averages. I use a candlestick chart, and with that I add the RSI and the stochastic indicator. I would suggest for a more detailed and in-depth look, please take a look at my website. Right, so let's take a look and see what exactly is involved. To explain briefly and before placing a trade, the following must be noted. Number one is the trend direction. And number two is the overbought and oversold indications. Number three is the first SAR indication, that's the stop and reverse indication, must synchronize with the RSI position. What I mean by this is that either the RSI has just crossed into or was in the area concerned. Number four, and this is not very important, is that the stochastic lines should be separating or peeling for added confirmation. So here goes. Let's take a look at some of the daily 60-minute charts that are being displayed over here. So let's take this possibly over here. That's the 7th of August, and we are looking at the trend position here, which is on top of the price, and obviously that tells us it's more or less a downtrend. Looking at this particular candle here, we can see a spike that hits the top, and it also takes the bottom of the Bollinger Band. Now this can be a bit confusing for a trader. Obviously this is some breakout of some news, but if you look at the RSI at the bottom, you will find that it is below its 50 dividing line and it's in the bearish territory, and it would be safe to take a short on this candle here. Let's take a look at another one, which is this one here, which is a price bounce back. It has spiked the 20 moving average, obviously a bearish move, a bullish move with a spike, and we take our trade over there. Now if we go further up, again we have another spike, or should I say a bounce back over here. It's hit the 20 moving average, and we have our first stop and reverse indicator. And if you look at the RSI at the bottom here, sure enough it's in the bullish territory. And that's the 50 dividing line there, and that's the bearish bullish I beg your pardon, this is the bearish territory, and that's the bullish territory. And again, looking at the first SAR indication there, and the RSI indicates that it is in the bullish territory. Let's look for another one, and here we go. We've had a couple of spikes there indicating an overbought situation. Same here. And this is our first SAR indicator, that's the first stop and reverse indicator. And if you go down into the RSI area, we find that, there we go, that is now in the bearish territory. Right, here we go. We have another one here. We have an overbought indication there. And though the stop and reverse indicator has indicated well before that particular indication, I will take my trade over here because this particular candle closes past the 50 moving average. Let's go and look for another one. We would certainly not trade this particular stop and reverse indicator. Two reasons is, one is the trend is not right, and also if we go down into the should I say go down to the RSI and we take a look, and that's in the bearish territory. There's no way we could take this trade. Here we have another one which is spiked the lower Bollinger Band, indicating an oversold position, and we see our first stop and reverse indicator here, which is the green dot here. And if we look below, we find that the RSI now is in the bullish territory. Safe to take the trade. And right, let's look at a trade here which I basically did not trade. It was dated the 25th of August. We have a lovely overbought situation here, but the thing is, bearing in mind that every candle is a 60-minute candle, that's an hour candle, it's just basically the stop and reverse indicator has given an indication far too late in the day, and I just wouldn't take that trade. But looking at the following day, which is the 26th of August, again we have a lovely overbought spike over here, and sure enough, at the close, or should I say a candle that closed below the 50 moving average, and we have the stop and reverse indicator giving indication, and also the SAR indicator, so beg your pardon, the RSI indicator indicating that that is now in the bearish territory, and I took my trade there and bagged a good 65, 70 pips of profit there. I hope this has been helpful. Thanks for watching.